Hello and welcome to this week's emergency edition of Money Matters, because as you know, I believe that money really does matter. So why emergency? Stock market's crashing, Sri Lankan debt default, inflation rampaging, obviously the war in Ukraine, lots and lots and lots of headwinds and lots of uncertainty about what to do with your hard-earned money. Let's just focus on a couple of things because I want to give you clarity. First, where are you, Paul? Well, I'm actually in Dallas, Texas. That's what you can see out here. So for the last 4 days, Annika and myself have been over here looking at the real roots of this financial crisis. We've been with experts in all sorts of things: money, sovereign debt default, credit default swaps, Bitcoin, all the various financial instruments. Why we're doing that? We're educating ourselves, of course, for our own benefit, but so that we can help share that learning, that wisdom from the greatest minds around the planet with you. Overnight, I got 34 messages on my Instagram feed with people terrified about what's happening in the stock markets. So let's just break this down and let's just look at how you can take your money and your family to a place of maximum safety. First up, inflation. Whether you're looking at the UK, the US, Europe, the Eurozone, pretty much around the world, around the developed world, let's say, you've got significant inflation. What does that mean? Well, anywhere between 7-8% and 15%. So what does that mean for your cash, for your money? It means if you just leave it in the bank, you're probably going to lose about 10% of its purchasing power, minimum, quite possibly 15% over the next 12 months. So pretty much nobody wants to do that. And there's two real agendas going on here. There's one group of people that want to grow their wealth, and there's another set of people that want to preserve their wealth. Now, depending on which you are, you might end up with a slightly different answer to this current conundrum. But if global stock markets are crashing, well, it's not really a big if, is it? If you take the US stock markets broadly, they peaked around about last November, end of October, beginning of November. And since then, depending on which stocks and shares you've got, or tracker funds or whatever, you're probably 30 to 40% down in that range. And there's one thing that for me has been killed over the last 6 months, and that's the 60-40 allocation. Many professional investors would say 60% shares, 40% bonds, and that would be flipped depending which side of the Atlantic you're on. But whether you're into bonds or shares, they've both tanked in the US. The UK is slightly different. For the last, 5 years, the FTSE 100 has kind of bounced around between 7 and 8,000, and it's still in that range. So if you're into UK stocks and shares, they haven't tanked yet. And I would put a big yet on that. So what's causing all this? What's at the root of all this? Well, essentially, it's money supply. You might have heard of quantitative easing. You might have heard about asset purchases. Essentially, the central banks have been printing money on behalf of the government, and the government itself has been buying stocks and shares. So in America's case, it's the Fed. So the Fed has now got a massive balance sheet where it's been buying equities. Now, interest rates have just gone up pretty much around the world, with the big exception of the Eurozone. So in America, in Australia, in the UK, they've all gone up, and that is going to be catastrophic for the governments if they allow it to carry on. But let's just really simplify it here. Is your money safe in stocks and shares? Well, Annika and myself took a decision 6 months ago, last October, to take all of our money out of stocks, shares and bonds and put it into other things. What? I'll come to in a second. We don't believe, and we've just spent 4 days over here in Dallas, Texas, talking to a lot of very, very specialized and very, very clever people that do not believe that stocks, shares and bonds are a safe investment. So they've all said invest in hard assets. Now, what's a hard asset? A hard asset is something physical, you can touch it, but it's become a bit strange these days because Bitcoin is considered to be a hard asset. So let's just look at a circumstance where you've got some money and you're worried about what to do with it because you don't want to lose it. And in an ideal world, you want to use that money to create more money. If we're all agreed that you shouldn't keep it in cash because inflation will destroy it, it's dangerous to put it into stocks and shares because of massive overvaluations that are in the process of correcting. Well, what else could you put it into? Well, I want to talk briefly about 3 asset classes: gold, silver, precious metals, that's number 1, Bitcoin, number 2, and property, number 3. Because realistically, for most people, those are the 3 choices that they would have. So gold, precious metals, fantastic. Annika and myself love gold, silver, and there's various others, precious metals as well. What are the issues with investing in something like gold? Well, number 1, please don't use quasi gold or stock market gold. What do I mean by that? You can buy many gold investment funds, ETFs, that sort of thing, and they're not real physical gold. So personally, I would stay completely away from that. That's not, because essentially you're just putting your money back in the stock market. So if you're going to get physical gold or silver, that's great, and it's probably going to protect your wealth reasonably well under all sensible scenarios. What are the issues? Well, number one, it doesn't pay you a yield. It's not like a house. It doesn't pay you rent. So it might protect your wealth, and it might even grow your wealth if the value of it goes up, but you're not getting any cash flow on a monthly or weekly basis. So that's my first issue with it. My second issue with it is physical security, because if you don't want to leave your gold bars or your silver bars in a bank, and I'll come back to in a second why you might not want to do that, well, if you got, I don't know, 10,000, 50,000, 100,000 pounds worth of gold or silver, do you really want that under the mattress in your house? That's a pretty big security risk, isn't it? An even bigger security risk for me, however, over and above that, is the government taking it off you. That's happened at the fall of the Roman Empire, for bring you forward to around about 1700, when Sir Isaac Newton set up the Bank of England. He confiscated all of the currency in circulation, which is effectively silver at the time, and there's been multiple other examples, but let's bring you forward to the 1930s, and the American government, to fund all its big expansion programs and whatever, confiscated all of the gold in the United States. It became illegal for a private citizen to own gold. Don't believe me? Go and look it up. So, huge risk in times of monetary chaos. The government will just take your precious metals. So yes, it acts as an inflation hedge. No, please don't put it into the stock market indirectly, paper gold. Physical security is a major issue, and please don't put yourself in a situation where the government can literally take it off you. So that's precious metals. Yes, but with certain caveats. Next up, what we got? Well, Bitcoin. I think Bitcoin's fantastic, or more broadly, cryptocurrencies are fantastic, but please do not put in any more than you can afford to lose. Very volatile. We've seen estimates over the last couple of days that it could go up, that Bitcoin, which is currently about $30,000 as I record this in the middle of May, could go up to 100,000, 200,000. We've even seen one guy that said it could go to $2 million. Now, if it did, and if you could buy it at $30,000, that's obviously fantastic. Equally, it could go to nothing. My advice, or my suggestion, is that you maybe allocate 5-10% of your net worth to it, but please make sure it's money that you can afford to lose. So that leaves us really with property, because if you don't want to do stocks and shares, you can't keep it in cash. Gold security, or silver, makes you nervous, and Bitcoin's volatility makes you nervous. Well, where else are you going to put your money? And the institutions in America, the investment funds, BlackRock and all that sort of thing, they've already answered their own question. What are they doing over here? They're becoming massive corporate landlords. Because forget the financials for a second. Maslow's hierarchy of needs. People need warmth, security, shelter. That is an absolute human need. And that's property, isn't it? So people need homes to live in, regardless of, whatever chaos is going on in the world. And if you can't leave your money in cash, you don't want to put it into stocks and shares. Gold security makes you nervous. Bitcoin's volatility scares the hell out of you. Where is all the money going to go? The US government, the UK government have printed trillions of dollars, pounds, euros worth of quantitative easing. So you've got this massive wall of money, stock market's falling apart, bond market's falling apart. Where's all that money going to go? And I understand why people think, inflation, stock market this, what's going to happen to property prices? Well, I don't know if you heard that American train behind me. In my view, tooting for emphasis, property is an essential asset class. Might it correct slightly? Well, of course it could. And if I look back over my 40-year investment career, when have I ever seen property prices go down to any significant extent? Twice. Early 90s, when Norman Lamont and John Major screwed up and lost all of our gold reserves. We were in the precursor to the euro. It was called the ERM. It was total and utter chaos, completely avoidable, and it was a UK issue. But that, I would put to you, was very much a one-off. Again, go and look it up. The other time, 2008, 2009, wasn't because of inflation. It was because of a credit crunch. It was because of these mortgage-backed securities that you might have heard about in the United States, which was essentially the market's trying to be too clever by half. If you're sat there thinking, oh my God, what am I going to do? How do I preserve my wealth? You've got choices to make, haven't you? Do you want to put it into the stock market? My answer is no. Do you want to keep it in cash? My answer is no. Do you want to put it into gold and silver? My answer is yes, but with the caveats that I've already given to you. Do you want to put it in Bitcoin? Yes, but I wouldn't bet my shirt on it if I were you. So the safest haven in this deeply troubled set of financial times we find ourselves in, for me, is property. And in particular, because I'm a UK property investor, UK property. Property prices at the moment, despite inflation, the last set of figures I saw in April 22, was that property prices were still going up in the UK by 12%. Now the markets know all about inflation and they're still going up by 12%. Rent increases, we're seeing 10, 15% year-on-year increase. So you've got property price increase, you've got rent increase, and that's despite all of these things. The stock markets, yes, they're falling, but the American stock markets in particular, they haven't just started falling in May, they've been falling since last November. So none of this is new information. It's all coming to a head, it's all coming to a bit of a crescendo, but yeah, that's how these things work. My advice, for what it's worth, keep your feet on the ground, be logical, watch what's going on around you, but for the moment, as I speak to you now, I believe the safest place to put money is UK property. And you might think, well, what if the bank stopped lending, Paul? And all that kind of stuff. Well, the amount of money in the world isn't going to go away. And if you're sat there with, £500,000 in cash, would you rather invest it with a property investor that knows what they're doing, they're going to get some great investment yields, etc., in the UK? Or would you rather keep it under your mattress, punt it on the stock exchange? No, of course you wouldn't. Even if institutional financing started to dry up, and there's no evidence of that, you can still get 5-year, 10-year, 20-year fixes if you want. So if you're worried about interest rates going bananas, don't, just take a long-term fix. But here's my core point. Here at Touchstone Education, we teach sensible strategies that are proven to work over the years, the decades, and the centuries. And the one thing that I've seen time and time again is that UK investment property is the safest haven. So when there's chaos in the world, what's that likely to do to UK house prices and property prices? So I hope that's some comfort to you. I hope these words all the way from Dallas, we're just about to climb an aeroplane and get ourselves back over to Europe, are giving you some answers to the chaos that's going on around you. I will do a full update on all the stuff that we've been learning about over here over the last 3 or 4 days. But in the meanwhile, stay safe, stay calm, stay logical. You've been wonderful. I've been Paul, and I'll see you next time. Bye-bye for now.